The $100 billion short-term rental market has transformed travel worldwide, unfortunately speeding up the country's housing crisis, but, like Airbnb, they made a fortune for early investors. However, today's consumers are abandoning the idea that began as a welcomed alternative to hotel chains, but has evolved into everything that is wrong with contemporary real estate. It's all doom and gloom, as it seems as though the best days are behind them. What brings about the collapse of short-term rentals? Is it the domino effect of the housing crisis, or was the business model doomed from the start? It all began with Brian Chesky and Joe Gbaya renting out a spare room with an air mattress to attendees of a conference when they realized all the hotel rooms had been booked out. They called their service Airbed and Breakfast, which became Airbnb. But right now, short-term rentals are going out of fashion. According to Bloomberg, Airbnb's shares experienced their largest decline in a year following the home rental company's lackluster guidance for the second consecutive quarter. The reality is that current situations are now exposing the flaws in the business model that made them so successful in the first place. Short-term rental platforms like Airbnb provided an innovative opportunity for property owners to generate income from real estate. Unlike traditional long-term leases, Airbnb allowed homeowners to list spare rooms at significantly higher rates, presenting an attractive alternative to the uncertainties and limitations of having long-term roommates. With a long-term roommate, you take on a chance of having someone who is untidy, noisy, doesn't pay their rent on time, or you just don't get along with. Airbnb's review system and the ability to block off specific dates empowered hosts to maintain control over their living spaces while accommodating travelers. Hosts could ensure a comfortable environment by vetting potential guests through reviews and ratings. The option to block dates allowed hosts to enjoy the privacy of their homes during family visits or enjoy peaceful evenings without compromising on rental income. Rather than just serving as a temporary substitute for a roommate, Airbnb was also renting out full residences to travelers. As the popularity of short-term rentals surged, the market evolved into a more lucrative substitute for traditional long-term tenants. Even with only half of the year spent renting out their home, many owners doubled their rental income from short-term stays, even after paying Airbnb fees. The financial benefit of short-term rentals for property owners near cities and tourist spots became evident quite quickly. While short-term rentals demanded more upkeep due to the need for frequent cleaning between stays, the financial gains clearly favored short-term over long-term tenants. An influx of commercial-scale Airbnb hosts entered the market and optimized their operations and amenities by adding remotely adjustable keypad locks, low-maintenance interior, and stylish yet affordable fixtures. However, as Airbnb aggressively advertised to new hosts, the popularity of short-term rentals surged, and the market dynamics began to shift, leading to unforeseen challenges. In time, the cracks in cash flow began to show. Despite higher fees, property owners continued to enjoy the added income from higher-yielding short-term rentals. This extra revenue allowed them to cover loan payments for subsequent properties, allowing them to qualify for multiple home loans. However, as the market has become oversaturated, hosts have been finding it increasingly difficult to rent out their properties for a profit, and many are experiencing a narrowing gap in income between short-term and long-term rentals. The diminishing returns and increased effort required for short-term property rentals have made them less appealing, especially for those who relied on the higher rent to afford their loans. As a result, many hosts who relied on the higher income to meet loan obligations may be forced to sell their properties. But why did short-term rentals fail so quickly after getting so big? One thing that's certain is that for several years, hotels have overlooked crucial needs of their customers. The expensive traditional hotels that no longer catered to the needs of many guests when they went on vacation were a serious problem that short-term rentals helped to solve. The housekeeping, restaurants, security, and other amenities are good, but they come at a high cost. Moreover, these services don't necessarily match what travelers truly seek from a vacation spot, a location that simply feels like home in a new city. Airbnb gave travelers their own kitchen, multiple bedrooms for their kids, and a level of privacy that they couldn't get at any hotel chain. Because it was often just someone's home, it seemed like a home away from home. Additionally, Airbnbs were far less expensive, particularly for groups of friends or family who would otherwise have to reserve separate hotel rooms. In any case, the features that first made Airbnb unique are now either disappearing or being replaced by rivals in a number of markets. Since 2019, the price of renting an Airbnb has skyrocketed, largely because of demand, high maintenance costs, and housekeeping expenses, particularly in popular tourist locations. For those who list their properties on Airbnb, the host cost is 3%, and for visitors, the service fee is 14%. As a result, a number of hosts have discovered that advertising their houses through local agencies results in lower costs, splitting the savings with guests. The technological overhead for a vacation rental platform from Airbnb is comparable to that of Uber for food delivery or ride-sharing. However, Airbnb earns hundreds of dollars from each transaction, whereas Uber only makes a nominal fee. In today's high-rate climate, this is a huge benefit as it has made the platform viable where other peer-to-peer platforms have struggled to make a profit. However, it has also put the company, which bases its whole business model on its service, under attack. According to Precedence Research, North America leads the short-term rental market, holding the largest share of 37% valued at $29.09 billion. A good chunk of this global dominance comes from rental giants like Airbnb and HomeAway that exploded with early market momentum. Outside the US, the Asia-Pacific has been the fastest growing region in terms of short-term rental adoption. There is nothing stopping new competitors from joining the market and displacing Airbnb in terms of market share by offering a better service or charging less. Other players like TripAdvisor, Booking, and Expedia are rapidly taking out Airbnb's share of the market pie. Wall Street Journal reports that on Thursday, May 9, 2024, Airbnb's stock plunged 7%, marking its lowest day in over a year. The company's quarterly financials show that during the same period, Airbnb's profit margins dropped by 194%, while its net income fell by more than 209%. Hotel companies have also greatly expanded their apartment-style accommodations, which replace standard hotel rooms with larger rooms that include several sleeping spaces and kitchens. This expansion caters to a broader clientele, exacerbating the challenges confronting short-term rentals by providing added value through the consistency of a hotel chain with the space and price of an Airbnb. Another issue that contributed to customers turning away from Airbnb was the trend among hosts to impose stricter cleaning requirements on guests, while at the same time charging excessively high cleaning fees. This frequently left guests feeling frustrated and dissatisfied. It has given the platform a bad reputation amongst customers, who now anticipate large cleaning fees on top of already high rates. In contrast, hotels typically provide complimentary housekeeping services as long as there is no permanent damage. Hosts, as investors, must acknowledge the inherent risks associated with investing. Many of them retain ownership of one or multiple properties, which they can now lease out in a market with inflated rental prices or potentially sell for a profit. This scenario proves advantageous for both parties involved. The people who did lose, though, were tenants priced out of homes because it became more profitable to rent to vacationers than long-term residents who needed a place to live. Oversaturation and regulatory challenges. As oversaturation in the Airbnb market increases, it further diminishes the availability of long-term rentals and drives up prices. In response, politicians are stepping in to address the issue in certain cities. Policies include limiting the number of permitted short-term rentals, along with imposing additional taxes on hosts operating unregistered hotels, potentially leading to the removal of the non-compliant listing. Other cities have made short-term rentals illegal without the same licensing as a traditional hotel, making it too costly for the host to operate. Certain cities have even gone as far as prohibiting short-term rentals unless the permanent resident of the dwelling unit is present during the rental period. These measures aim to reduce the impact that platforms like Airbnb have on housing availability and affordability, and they seem to be working as many cities implementing these policies have seen a decrease in the number of listings. Homeowner associations are another group having a significant influence on the market. Many associations are now prohibiting homeowners from renting out their properties for short-term stays. This restriction stems from concerns voiced by residents, who are often angered with the noise from parties and the security risks posed by short-term guests. Despite these regulations, some hosts choose to ignore them, viewing any fines incurred as necessary expenses of their operations. Now, Airbnb isn't passively watching as these challenges unfold. In fact, the company is investing hundreds of millions of dollars in legal battles worldwide to defend its right to operate. This is why they continue to spend so much advertising their services as a way to see a new city with a local host, despite the majority of their properties being rented out as entire homes, where guests never interact with the host. Platforms like Airbnb are packing up and heading out in certain cities, but whether short-term rentals will be a complete bust remains to be seen. If you enjoyed this video, like, share, and subscribe to our YouTube channel for more. Stay tuned.